Today's verse of the day. Genesis chapter 21, verse 22. God is with you in everything that you do. This is just an important reminder to not forget. No matter what you feel like you're going through, no matter what week you had, month you had, year you had, whatever issues you're facing right now, know you're not alone. Know you're not in it alone, and that God is with you every step of the way. Now, you might not understand why it is it's you that's going through this thing that you're dealing with, but you have to just reflect, try to show gratitude even when you're down and even when things are not going your way, because that's life. Life is not going to always be rainbows and sunshine. There's going to be days that rain. There's going to be days that have snowstorms. There's going to be blizzards. There's going to be so many different issues and things that come about in life. But you can't let that make you a Debbie Downer. You can't let that upset you and get to you so much that you can't continue to pursue life and continue to pursue greatness. You have to continue to push forward and continue to achieve and strive for more, no matter what. Because in the book of Genesis, Joseph was betrayed by his brothers, became a slave, locked in jail, and throughout all of that, he still overcame all those things and became king of Egypt because of God, because God was with him every step of the way. God knew what he was putting Joseph through, and God knew that Joseph could handle the things that he was throwing at him. So put yourself in Joseph's shoes and treat yourself as if you're Joseph, and God has your back each and every step of the way. So make sure just not to forget that. With that being said, let's get to the charts. All right, you guys, here we have the Monday charts loaded up on the QQQ chart, 5-minute time frame, as you guys see. So Monday we had some interesting structure coming in. As you guys see, this big red box right here, we opened above that box after failing that box, I believe, on Friday. We had some failure. Actually, no, we didn't fail that box Friday. We were in the same range, essentially. So we were going from 618 to 624, broke out of 624, got above it, going into new highs of 626 and 627. So Monday we kicked in some strength as well, showing some bull flag formation here after forming this orb level from the lows of 622.2 to the highs of 625.8. We got a break above that level, where we then saw a little bit of failure come in around the 624.5 level, going back down to the orb level, but bouncing back and forth between the zone, forming the bull flag, where we then saw a failure to go lower and then a breakout higher, where we then got above this 626 level and closed above it. This is where I actually ended up taking a position using that 626 level as a stop loss, and we were able to catch the move from 626 all the way up to 627.39, where I then took profits. We got some pullbacks coming in around 626.5, held that level and pushed higher. So this was our trade on Monday that we took on QQQ, and it was a quick and easy trade. It took a little bit of time, but nonetheless, we were able to overcome this market choppiness in a way and just come out successful for Monday. So let's move on to Tuesday. All right, ladies and gentlemen, here we have the Tuesday chart loaded up on the Meta ticker symbol META 5-minute time frame, as you guys see. So for Meta, we had some very, very strong weakness come in this week. Particularly on Tuesday, we had a failure from 642, actually 645 going down to 642, where we then failed that level, going all the way back down to our previous major demand level of 638, getting a failure there and actually forming our orb below around that level. Seeing that formation come in, I then looked to take puts. So I did exactly that once I saw this failure to reclaim and hold above 638, and also a reversal off of this VWAP level, this blue line right there at 639.18. Using that candle high as a stop loss, I caught this move and it was a banger. We caught this entire move from 639 all the way down to 630.06, where I then ended up taking full profits. I didn't have a lot of size in this, unfortunately. I wish I had more, but we made money nonetheless, so I was not upset at all. Once I took profits, it did continue to go lower, all the way down to about 624. And then from there it bounced back to 630. Then we got some rejections and movement back and forth between those levels. But we caught the majority of this move from 639 all the way down to 630, which I was super duper excited about. This is the kind of moves that you live to take in the stock market. Very great structure when it comes to the failure of the demand, the downtrend, and then also in the hourly. If you look at the hourly here, you'll see that it also was forming a inverse head and shoulders. Let's go to it here. Inverse head and shoulders. So you guys will see the, let me see, is this it right here? Is this Tuesday? Tuesday was right here. No, that's not it. It's over here. There it is. So you guys see left shoulder, the head, the right shoulder, and then Tuesday, boom, big candle, big rejection, big move downside. Then we had a bear flag form for continuation downside, and then the continuous days just continue to go down lower and lower. So Tuesday was a banger. Let's move on to Wednesday. All right, ladies and gentlemen, here we have the Wednesday charts loaded up on the QQQ 5-minute time frame. As you guys see, we were back in that rejection zone from 624, getting a failure from there initially, going all the way down to the bottom of this zone at 617.25, where we then bounced there, getting rejection back off this blue line, which is VWAP, going back down below that level, going all the way down to 616, getting a reversal there, going back up. This is where I actually took my position after seeing continuous rejections lower and lower. I was looking for a rejection around that bottom of that zone, so pretty much a break and retest of this lower bottom zone of the resistance, and that's exactly what I did. I got an initial entry here, then I got another entry after going higher and failing to go higher than the previous candle. Also, it was actually the fib retracement level. If you guys don't know what that is, you should look that up. Pretty much it's a formation of lines that form and show you levels that can retrace and happen in the market for you to get opportunity to take a position. And that's exactly what it was. And I took that position using that wick high above this candle and above that fib retracement level as a stop loss. From there, we saw a $2 move from 618.6 all the way back down to 615. Getting full profits for the most part, leaving a runner, getting stopped out eventually. I just ended up stopping out after we reversed and went back higher. I was able to capitalize off this move nonetheless from that entire move right here from 1030 to 1050. So a 20-minute trade in the books. Very happy with the execution on that day. And yeah, it was just an overall downtrending day where we then saw demand, which was at 615, that green box that I have marked out here. We then ended up reversing and going back up to the red box. So very tight range between these two levels, which we'll talk about on the predictions for next week. So that being said, let's move on to Thursday. All right, and here we have the Thursday chart loaded up on the NVIDIA chart, ticker symbol NVDA. Now, NVIDIA was a roller coaster, and we ended up losing on this day, unfortunately. Let's talk about it. So, initially, for the start of the day, we had very strong semiconductor strength coming in after TSM reported good earnings report and had a good earnings call. With that, every other stock in the semiconductor space, like NVIDIA, AMD, Avgo, etc., all ran up to the upside going into the market open on Thursday. However, NVIDIA showed some weakness, and I was acknowledging of the weakness, but I didn't think it was going to continue to be weak. So I was looking for a reversal of the downtrend that we have here. As you guys see, we reversed off this 189.18 level, going down from a high to a lower low, lower high, then a lower low, lower high, lower low, so on and so forth. So my first entry that I took was actually what looked to be a reversal of this downtrend position. After seeing a push above 188.5, I looked to take calls, and then I got faked out of this position where we then saw a failure back lower, where I then stopped out, saw it go lower, then it reclaimed the previous low again, pushing back to the same level where I took the initial entry, which is where I should have said, okay, I should wait for this to break above this level. However, I did not. I looked for a re-entry once again at the same level, where I then got wicked out of it once again once we reached back lower down here. And as soon as I stopped out, this is probably one of the most frustrating things as a trader. Whenever you stop out of a position and it runs off on you, because that's exactly what happened Thursday. As soon as I stopped out, as you guys see, we had an instant reversal going all the way back up to the previous high of the day, breaking above that level, then rejecting, coming back down, breaking back above that level, going to a new all-time high, and so on and so forth. So very, very choppy price action from the video, but it was also on me to not acknowledge and not pay more attention to the downtrend that we did have in the market at the time. What I should have done was wait for this previous level to actually break out and close above that level for me to then take a position like it did here. Once doing that, I could then have a more defined risk to reward, knowing where that previous candle low would be my risk and that reward would obviously be at that all-time high because that was my target. So unfortunately, we lost on Thursday. It happens in the game. You know, losses are inevitable. Those are a part of day trading. Unfortunately, there's going to be days that the market's choppy. There's going to be days that, you know, the market's not on your side, things of that nature. So it is what it is. But that being said, let's move on to Friday and see what we took going into Friday. Hey, what's good, you guys? If you guys are new to the channel, make sure to leave a like, subscribe, turn on the notification bell, and comment your favorite part of the video. I love you guys so much. Also, check out the website. It is now live, continuebelief.com. Now live. Get your free course. Sign up, get your free course, and learn how to day trade. Day trading can change your life in an instant if you apply the right principles. So, continuebelief.com is now live. Once again, thank you guys for watching. Let's get back to the video. All right, you guys, and here we have the Friday's charts loaded up on the Amazon chart, ticker symbol AMZN. As you guys see, opening bell, we had a projection off of this 239.57 level, going all the way back down to 237.15, which wasn't too far from our demand zone on Amazon, which is right around 236. I then started to notice a bear flag form in this position once it was failing to go lower than the orb level, but also failing to get back above this VWAP and EMA levels. So I was keeping an eye on it, monitoring the situation, trying to look for opportunity in this position. I ideally wanted to learn from my mistakes previous day where, you know, there was a flag forming in the 5-minute time frame, but it was also choppy and not showing a lot of movement and conviction to that range. So what I did was I waited for a break below that level that needed to break in order for the flag to continue. And so that's what I did. I waited for the level to break, and once the level broke, we got a very small window of opportunity in this position. As soon as we closed, I took a position here using the candle high and the previous candle reclaim of this 237.3 level as a stop loss, which was the orb level, and use that as my risk, and also this candle high, which was 237.1 as my risk, to then take a position and see lower going down to 236. We got a quick move to the downside where I saw a very tremendous return on my trade, took profits, left the runner, and got stopped out. And that's what I should have done yesterday for the video. However, I did not do that. I learned from my mistakes though, and so I applied my lessons from that trade using in today's trade. And so we were able to capitalize and finish out the end of the week green. So that was our trade that we took for Amazon. Overall, very clean price action, very clean execution. You know, there's hiccups a part of the game. There's issues and mistakes that you'll make, and you just have to learn and how to adapt when making those mistakes. It's important that you don't linger and let the mistake impact you in a way that you can't focus going forward. You have to be able to move forward and remember that God is with you, just like I said in the beginning of the video. So with that being said, let's move on to see what we can predict going on into the market next week. All right, ladies and gents, finally we have the daily chart loaded on the SPY chart, ticker symbol SPY. So as you guys see, this previous week we didn't have a lot of movement. We just ranged between 696 and we got all the way down to 686, where we then saw a bounce from 686 back to that same range of 696 to 690, closing out the week at 691.66. What can we look to see happen going into next week? Of course, depending upon where we open, I think that our major line in the sand is going to be 690. As long as we hold above 690, we have opportunity and potential to go higher. If we can get a break above 696, we can see higher, going back into new all-time highs where we can then possibly reach towards 700. However, I do want to make note of something interesting forming here. we have a rising wedge forming. So what is a rising wedge? A rising wedge is simply when the market starts to consolidate in a tight space. And what happens typically whenever it forms in a tight space like this is a sharp breakdown to the downside. Now there's something called a falling wedge where it does the opposite. It forms a tight range to the downside, and then it has a sharp breakout to the upside. But a rising wedge has a range bound point that it starts to create going to the upside, and then it has a sharp breakdown to the downside. So that's what we see forming here on SPY. And if we don't acknowledge this move, we would miss out on this opportunity. So like I said, being that we have now reclaimed the 690 level, that is our line in the sand, having that retest of 686 also confirmed that we're forming in a more confined space, going higher and higher and higher. But it will get to a point that we will get to a very tight space, and if the breakout doesn't happen before then, it surely will happen around then. Whether it be a breakdown or breakout, I don't know, but typically whenever this formation happens, it signals that there is downside to come in the future. So I just wanted to make that known for you guys to be mindful of going forward into the market. Trade with caution, use your risk management wisely, use your stop losses, and don't hold thinking that you're going to get rich off of one play. You gotta manage your plays accordingly and do your proper risk management in your trades so that you prevent large losses happening in your accounts. So with that being said, just wanted to make sure you guys were taking note of that and being mindful of those things. Other than that, I think that as long as we hold above 690, we have great potential to continue to go higher. However, like I said, I do notice that rising wedge being there, so that will be a thing that I keep in mind going into the market as I day trade. I haven't been day trading SPY for that reason, because it's been very choppy and I haven't seen a lot of opportunity in that particular trade or chart. And so that's why you guys see me trading a lot of other names. I'm looking for opportunity in other places, because there's always opportunity. You just have to go find it. So yeah, but with that being said, I hope you guys enjoyed this video. Thank you guys so much for watching. Make sure you guys leave a like, subscribe, and turn on the notification bell for more content. If you guys have not checked out the Rich Out Gains podcast, it comes out every Monday at 7 p.m. So make sure to check that out. Tomorrow it will be released. I will see you guys in the next video. Thank you guys so much for watching. Peace.